guys, so it's Keoshia and I'm back for another video. If you like my videos, please give this a thumbs up. Make sure you guys subscribe. Make sure you turn on that notification bell so you don't miss any more videos from me. And without further ado, let's just get into today's video. Okay, you guys, so I am continuing on with the third video in my budgeting series. So if you are new here and it's your first time watching one of my budgeting videos or this budget series, the first video was about your why. The second video was about tracking your expenses, and today we're going to talk about monthly income and how we spend that monthly income and how you can kind of figure that out. And I'll get into more detail as we go along. But if you missed the first two videos, that's okay, because I will have them linked down below and up in the iCard so that you guys can go ahead and check that out either before or after this video, whichever way you prefer. It is best if you start with the first video and actually do it in order, because that way you will know who we are. Okay, so once again, I'm gonna move to the side because I am going to put a little worksheet here for you guys. Don't worry, the worksheets will be linked down below. So if you would like to use the worksheets, I will make sure to link the worksheet from last week, and I will link the worksheet from today. So let's go ahead and talk about monthly income. So you need to jot down your monthly income, all the income that you make from your main job, your second job, your side hustle, your entrepreneurship, giving, whatever the case may be. This needs to include, if you have a spouse or a significant other, you need to include their income as well. I find that if you combine your income in a two adult working household, it works out better. Keeping finances separate to me is not very beneficial. It wastes money. You do better when you work together versus working against each other. But that's just my opinion. Do whatever you would like to do. Okay, so let's go ahead and look at this monthly income sheet. If I look down, y'all know I'm looking at the sheet. I apologize. So we have the date, we have the source, and we have the type and the amount. And so what I mean about date, of course, is self-explanatory. The source is self-explanatory, but the type could be your side hustle, your main hustle, your interest. You know, if you have a large bank account and you make $200 a month in interest, your stock dividends, whatever it is, your investments, anything like that, that is what you need to write down. So if you on February, oh, I got red pen, let's turn that to black, we don't do red pen. So say tomorrow on February the 23rd, from your main job, you made, so your paycheck basically, you make $2,000. That's how much money you made for your main job. Now remember, this amount needs to be after taxes. Do not count your gross income. You need to count your net income. So your gross income is what you make before they take anything out of your check. So taxes, health insurance, I don't know, what do I get taken out of my taxes, health insurance, dental, all that type of stuff. The net income is after they take all of that out. That is what this number needs to be. Do not put your gross income or you will be sad at the end of the month, because you will be way in the negative. So make sure you're using what your paycheck that is actually getting deposited into your account is the amount that you put on this sheet. Do not put your gross income before they take out all the deductions out of your paycheck. So then say on 2/27, you work on YouTube. YouTube is your side hustle. So you got your money from YouTube and it was a deposit to your account and you made $700 on YouTube. I wish I made $700 on YouTube. I don't make that much, but YouTube nonetheless. And then say on 3/1, I know it seems like we're going outside the month, but these are just examples. You have interest. So say you have a huge savings account and it has a lot of money, and I can't spell, so don't talk about me. I know I spelled interest wrong. And it's $150. That's what you got on that. And then let's just say on 3/3, you know, you got some dividends. I can't remember what you call the money. Is it dividends when you get money from stock? I think that's what it is. I don't know. So let's just say stocks, and you got $600. I need to get me some stocks. I can get me some money. So then you're gonna add this all up. Don't have a total on here, but you can just write total at the bottom, and you know, all of your things. And you can do 2,000 plus 700 plus 150 plus 600 Dang it. Don't know how to use a calculator. 2,000 plus 700 plus 150 plus 600 equals. So you, for the month, you have $3,350. That is your total income for the month. The amount of money that you have made and the amount of money you need or you have to distribute among all of your expenses that you have going on. So this is something that you need to do every single month. You can use this format, you can use a spreadsheet, whatever it is that you prefer, but you need to make sure that you are writing down your sources and the amount. The type, you know, you can if you want to, the date you can if you want to, but these two columns are the most important. So this will give you an idea of what it is that you're making from each area that you actually receive money from, whether it's gifts, YouTube, main job, side hustle, your entrepreneurship, whatever the case may be. You need to know what your amount of money is that you're getting in every single month, okay? So that is why we have that budget sheet. Now, one thing I want to point out about these main income is that make sure it is reliable, okay? Don't be writing down stuff like your income tax that you only get once a year unless you're going to get it in that month. Don't write down, you know, your cousin may give you extra money every now and then. That is not considered a reliable source. A reliable source is a full-time job, entrepreneurship that makes you money every single month, a stock that pays you dividends every single month, and a bank account that gives you interest every single month, okay? And it's either steady, the same amount, or either it gets higher and higher every time you get paid. Make sure you're counting reliable sources of income, things that will make you money on a regular and consistent basis. All right, so now that we have established what your monthly income is, you have written down your sources of where you spend your money, kind of track it down, and you got your why and all that kind of stuff. What is the next step? So the next step is to define what are fixed expenses, flexible expenses, and discretionary expenses. And we are going to go ahead and define what those mean. And of course, I have a worksheet for you so you can make sure you categorize these correctly. So let's start with fixed expenses. Fixed expenses is something that happens every single month. What's the number one thing everybody has to pay for? Rent. You got to pay for somewhere to stay, most likely. If you're an adult and you're doing adult things, you have to pay for where you stay. So make sure you are paying for your rent, because you like that. The second main thing that people usually pay on a consistent regular basis is a car note, okay? Everybody's got a car, they trying to drive around, they trying to zoom, you know, whatever. You got to pay that car note. You don't want them to repossess it. But fixed is just something that is regular and consistent, that is always going to be there, okay? So the next thing is flexible expenses. And these are things that you must have, but are not the same amount every single month. So for instance, your rent is fixed. It's $1,800 at least for a year if you're leasing, and the same amount for the rest of your life if you, or till you pay your house off, okay? But flexible expenses are, once again, utilities can be fixed or flexible. It just depends. Now some people, it fluctuates, and so you can put it in the flexible expenses category because it's a regular thing and it's something that you have to have. But your light bill can go up and down depending on the weather. Your gas bill can go up and down depending on the weather, because if you have a house that's heated by gas, you know, in the winter you'll get gas, in the summer you'll use more electricity, you know, vice versa. Your cell phone, you know, it could fluctuate if you go over your data and stuff like that, but most likely most people have unlimited data nowadays, so we really don't have to worry about that as much. So things like that are considered flexible expenses. Okay, so last is discretionary expenses. These are expenses that can be eliminated or reduced or changed at any point in time. You can get rid of cable, Netflix, Hulu, all of that type of stuff are expenses that are not necessarily necessary. You don't have to have cable, you don't have to have, you know, internet, none of that. Not really, not to survive and live as a human being. You do not need those things. I mean, it's convenient, but you don't actually need them. So that's why they are considered discretionary spending areas. Okay, so now that I have kind of given you the definition of what all these mean, let's go to the spreadsheet. Y'all know I love visuals. And let's put some of these things in areas so you can kind of see what I'm talking about. So let's do that. All right, so we've made it to our little spreadsheet. It says expense categories. That's kind of where I wanted you, when you were spending money, to kind of think of categories for what you were spending on. So for instance, fixed expenses would be rent, car insurance, your utilities. It just depends, you know. Oh, didn't spell that right, Keoshia. Utilities. Don't mind me. What else can be considered a fixed expense? What do I have on my list? I mean, your if you have ADT or something like that, just depending on where you live, it could be discretionary, but for most people nowadays, it's probably very helpful to have stuff like that. And those are kind of the options. So flexible would be like your water bill, your fuel, your gas. I say gas is for like your house, and your fuel is like for your car. Your cell phone, your groceries, things like that. And then discretionary would be stuff like dining out, going to the movies, subscriptions. So that would include like Netflix, Netflix, Apple Music, Spotify, things like that would fall into those categories. And what this will do, it will kind of give you sort of a idea of where most of your money is going. Most of your money should be in your fixed expenses, and the least amount of your money should go into discretionary expenses. So you want to make sure one is not overpowering the other, and your discretionary expenses should never cost more than your fixed expenses. That means you are drowning, and you are drowning fast, sis. Okay, so you need to go through this sheet and just write down everything that you consider a fixed expense, everything that you consider a flexible expense, and everything you consider a discretionary expense. Okay, so make sure you're doing that. And once you do that, then we can move on to the next category, which is to write down your monthly expenses. So this means whether they are fixed, flexible, or actually discretionary. So you can write down your rent, and you can put it in fixed. And you know, it don't matter the method. I just put that. Some people just want to know if they pay cash, or they use their credit card, if they use their saving account. That some people want to write that down. So you can say your rent is $600. Then you can say your car note. Jesus, my spelling today is atrocious. You can put it $350. Then you can say you got groceries, which is flex, and it was $150. Then you say you got gas for the house, which could be fixed or flex. For me, it's fixed, and it was like $16. Only my stove is gas, is why my gas bill is only $16. Fuel for your car. Let's just say, if you know your car like I know mine is actually fixed at $30 every time I fill it up. So that could be it. So this is what you're going to do. And then you're going to take this and you're going to decide if these areas can be improved. Okay, so once you get that all together, let's just use these as an example. You're going to add these up. You're going to get 600 plus 350 plus 150 plus 16 plus 30, and that's going to give you $1,146. so that is the total amount of your categories. And then you want to break it down even further to like your flexible category. For instance, 150 plus 30. Let's just use that. It's 180. Okay, and then you have your rent, which is 600 plus 350 plus 150. Nope, plus 16 equals 966 plus 180. Yep. Okay. So 966 was considered your fixed. And then what you spent on flex was this much. And then we need to have another category. So we need to put Moe's, which is dining out, which is discretion. And it was $10. And then you had Starbucks, which is definitely discretion, which was, you know, $15. Starbucks high as hell. Then you had Netflix, which is discretion, which was Netflix nowadays, $15 too. So that's $30. So that's $40. So your discretionary is $40, okay? Right here. So once you do that, we'll move on to your remaining income. So you need to figure out what your remaining income is in order to distribute everything correctly. So we're gonna go back to our monthly expense. Our monthly income was $3,350. So we're gonna write $3,350, okay? Our fixed expenses were $966, and our flexible expenses was $180. And then you're gonna subtract that. So you got 3,350 minus 966 minus 180. And these are just examples, you know, of course it's gonna be completely different than this. And then your remaining income goes down here to 2,204. And you always want to pay yourself first. You always want to put whatever you can in savings account before you spend anything on discretionary spending. As you can see, my formula here is monthly income minus fixed expenses minus flexible expenses means remaining income. And then for how to figure out how much you have for discretionary spending is your remaining income minus your savings. And then after that, you can spend this money on anything that you see fit. So that's minus 10%, so times 10%. So then you would save $220.40. So 2204 minus 220.4 equals you have $1,983.60 to spend on your discretionary spending. Okay? Whatever you deem that to be, whatever you think that is what you can do, okay? And so by assigning your remaining income to discretionary spending, it makes sure or ensures that you're always spending money on the things that you actually need to spend money on. It's making sure that you are actually, you know, saving if that's what you want to do. Looking at your expenses and making sure that they are where they need to be and not too high. And what I mean by too high is, so take for instance that at the end of the day, I don't know, this number was negative. So say this was you only had, I don't know, $150 left, okay? So say this was $150. All of this changed and ended up with you $150. So your remaining income was $150, and that's times 150 times 10%. You could only save $15. That means you only have $135 for discretionary. So if you were trying to do sinking funds and vacations and pay off debt, this number would be too low. It would take you forever. So at that point, you need to maybe look at what you are spending in other areas, you know, for your discretionary spending. And we will get into that next week, okay, you guys? So I will make sure that I have these sheets for you guys so that you can check them out, okay? And so one of the other factors of this, that's in the most ideal world, that you will actually have enough money to put towards discretionary, to put towards debt. But say you don't have enough money, monthly income, to cover your fixed expenses. What do you do then? We are going to talk about that in the next video. I have talked so long in this video. You have gotten a lot of information. I won't want to confuse you anymore. But the purpose of these exercises are to get you ready to do a budget. You need a lot of information before you can start a budget. So I don't want you to feel like I just got you doing all kind of crazy shit and it's not going to like benefit you in the end. I promise you. If you know all of this information going into your budget, it will make it that much easier. So I promise this is not like a wild goose chase. You're gonna thank me in the end. I promise. A lot of my clients have. I've thanked myself in the end, okay? Because I took these exact same steps. I have done them before. You actually can see them on my YouTube channel. You can see me reducing discretionary, reducing fixed, reducing a lot of stuff, getting rid of a lot of things, okay? Tracking down my spending, getting rid of some stuff, you know, budgeting super hardcore. So I promise you this is not a wild goose chase. I promise it will help you in the end. So next week I will show you what to do if your discretionary, if you don't even have any money left, or you're spending too much money on discretionary income, or if you don't have enough money to even cover your monthly income, is not even enough to cover your fixed expenses, therefore you can't even make it to the other areas that are on this remaining income worksheet because you don't have any remaining income, okay? So I hope you guys enjoyed this video. I hope it wasn't too confusing. I tried to make it as clear and concise as possible with all of my rambling in between. But if you don't understand anything and if you have any questions, please leave them in the comments below. I promise I will answer you. So if you like this video, please give it a thumbs up. Make sure you guys subscribe, and I'll see y'all in the next video. Bye.